Hi, everybody. Welcome. We are really excited to get started. I wanted to go through a few little announcements before we formally start, and I'll give a quick introduction to our presenters as well. But first, I wanted to just discuss next week's upcoming webinar. In case you didn't know, congressional leaders have reached a deal on aid for small businesses that have been hurt by the coronavirus pandemic, including about $310 billion more to the Paycheck Protection Program. The Senate should pass the relief bill late Tuesday before the bill is sent to the House. Assuming that all moves forward as expected with that, next week's webinar will focus on the final details of this new funding legislation, and it'll also discuss the PPP loan forgiveness. Registration will be open in the coming days for that, which leads me to Squire has a COVID-19 business impact newsletter. We send that out on a regular basis. It includes articles, upcoming webinars, other resources. And to sign up for that, I'm going to post a link in the Q&A section. I'm also going to post a couple other links. One is for a quick form that you can send in to request assistance in any area from our COVID expert team. We're here to help, and we know that there are a lot of opportunities available to you, so we'd love to hear from you if you're interested in any help there, and a couple additional resources as well. Again, I'm going to post all of this into the Q&A section. I'll do that right now. And now I'll go ahead and introduce our fantastic presenters. We're excited to have Chuck, I knew I was going to mess up your name. Chuck Maniaci.
Exactly right.
What's that? Sorry?
Exactly right.
Okay, thank you. He's the Vice President of Regulatory Analysis and Design at Sovos, which is a leading global provider of software that safeguards businesses from the burden and risk of modern tax. An attorney by trade, Chuck leads a team of attorneys and tax professionals responsible for all the tax and regulatory content that keeps Sovos customers continually compliant. Over his 15-year career in tax and regulatory automation, he's provided analysis to the Wall Street Journal, NBC, Yahoo Finance, Politico, USA Today, Entrepreneur, and more. So, Chuck, thank you so much for being with us. In addition to Chuck, we also have Joe Hilstead. He's a partner here at Squire. Joe has over 16 years of experience working with clients on a broad range of tax issues and specializes in corporate income tax matters and the U.S. taxation and international transactions. Prior to joining Squire in 2014, Joe spent 10 years with PwC in Southern California and Washington, D.C., serving clients in multiple industries. Lastly, we also have Wade, who's kind of helping out in the background with some of the Q&A that you may be submitting. Wade Watkins is also a partner at Squire. We're grateful to have him here to help us out. And with that, I'm going to go ahead and turn it over to you, Chuck.
Great. Thanks so much, Sarah. So, Joe, it's a great pleasure to be co-presenting with you today. Thank you so much. And thank you so much to the Squire team for hosting this session. So let's get right into it.
Chuck.
Excellent. So let's get right into it. For our agenda today, we're going to focus on the sales tax ramifications we're seeing as it relates to the COVID-19 pandemic. We'll break it down in this sort of way. We'll talk about what we're seeing governments do and not do right now in terms of impacting sales and use tax determination and then later filing. We'll talk about what companies should be thinking about and why they should be thinking about compliance during this particular time and in the immediate aftermath, ideally a robust recovery subsequent to all our stay-at-home orders being rescinded or phased out at least. We'll talk about some options and some things that jurisdictions are offering to companies that are having either filing or remittance challenges in the near term, maybe because staff members aren't available or unable to file returns as efficiently as before. And then Joe will help me a little bit talk about how this is all playing out in the area of global VAT. And I think as we do have that conversation, it'll be interesting to see where VAT differs from sales tax jurisdictions in terms of reaction. So with that said, let's jump right into it. Let's talk about how governments are reacting. And in many ways, in the sales tax world, it's business as usual. So for example, we here at Sovos, we very closely track rate and rule and product taxability changes as they happen every single month. And April being a quarter beginning month, we know historically that a lot of local jurisdictions will change their tax rates on April, and then maybe in July and on January 1 as well. And we saw pretty close to what would amount to a normal volume of rate changes effective April 1st, 2020, in the neighborhood of close to 200 localities out of the thousands of localities that have local rates. So we didn't see too many locations rescinding planned rate changes. We didn't see too many locations enacting emergency rate changes. In that respect, it was pretty much business as usual. Interestingly, well, at least interesting to me and hopefully interesting to you in the audience, those jurisdictions that were planning sales tax holidays in the near future, meaning in the upcoming month of May and into June, those seem to be going on as expected. So we have ones coming up in Florida for disaster recovery items, for Texas for Energy Star efficient certified items. Those are both planned. I thought that was kind of interesting because, of course, people are discouraged from physical shopping unless when specifically necessary. But of course, these sales tax holidays apply in the same way to online purchases as they do to in-store purchases. And I believe at least Texas provided some guidance to its taxpayers saying that, please, continue to practice your social distancing, but there's nothing wrong with online shopping during the holiday and buying eligible items. So those holidays are going on. In terms of what we're seeing as states may be changing things at the margin, Puerto Rico, one of the most challenging sales tax jurisdictions in the world. In fact, it very carefully straddles that line between a sales tax and a VAT jurisdiction. It has elements of both. They did enact an emergency sales tax holiday for items they deem to be of quote unquote first necessity. And that holiday is currently slated to end on April 30th, but I wouldn't be surprised if I see Puerto Rico extend that another month or at least another couple of weeks. Puerto Rico has a history of using sales tax holiday means during times of natural disasters. So they did the same thing when they had their very serious back-to-back hurricanes a few years back. They announced long sales tax holidays, and there's wisdom on both sides of that. For sure, it's important, especially in a high tax jurisdiction like Puerto Rico, to put more money and to increase the purchasing power of the money people have by eliminating the tax impact. But at the same time, to account for a holiday, especially those clients that don't use any tax audit, especially those taxpayers that don't have any automated tools, actually requires a lot of local resourcing. So you could argue to some extent that putting on a holiday in a time of necessity actually creates an enormous and sometimes really challenging burden for local vendors who have to change their point of sale systems to account for this special rule for certain products for a certain period of time. But yeah, Puerto Rico has done this. I haven't seen any other U.S. state follow that same route. A couple of local jurisdictions, and only a couple, have suspended their local meals tax as a way of easing the burden on restaurants, which we all know are suffering right now. But again, not widespread, just a couple of jurisdictions here and there.
Yeah, and Chuck, I think you mentioned this, but Puerto Rico as a U.S. territory has implemented this sales tax holiday on necessities, and you mentioned that you're not seeing any other states do the same thing. Are there any other states that are contemplating either a sales tax holiday or a reduced rate on necessity items?
Not that I've seen at all. And truth be told, even though tax complexity for both of our organizations is our bread and butter, I think that's a bit of a wise policy. Now is not necessarily the time to be really changing fundamental tax rules for a period of time, because it already puts an additional strain on strained businesses. So no, I haven't seen anything, but I haven't seen much of anything in that respect.
Gotcha.
So what we have seen in terms of things that are changing a little bit is a number of localities. We've seen almost a substantial reversal in environmental policy. So a lot of jurisdictions that have gone out of their way to prohibit the use of plastic and paper disposable bags by way of having bag bans, they've rescinded those bag bans, and they've also rescinded the fees that are mandatorily charged on paper and plastic bags provided at the point of sale at checkout. So all of Massachusetts, where I'm at, they've rescinded their local bag fees. All of Connecticut and a bunch of other states and a bunch of other localities in Colorado, Minnesota, and Ohio. What I'm curious to see, and what I haven't seen yet, is states rescind or temporarily suspend their bottle deposits. I think a lot of stores aren't accepting recycled bottles and cans right now in those states that have bottle bills. But the natural extension of this is suspending those bottle bills, and I haven't seen that happen, which again I think is kind of wise, because you don't really want to disrupt business in a time where companies would be challenged to comply. We have seen some jurisdictions, I think wisely, allow licenses to expire, allow licenses and exemption certificates and things like that that were set to expire. They've allowed those to extend beyond their expiration date, and based on the practical concern that there's nobody available at the Revenue Authority to process a license renewal application. We've seen it in Pennsylvania, we've seen it a couple other places. Truth be told, I think this should be done, and this is me just editorializing slightly, it should be done in more jurisdictions, because I know that state agencies are far less staffed than they were a few weeks ago, and processing these renewals is something that they could avoid by simply extending the licenses a little while. The state of Washington.
Chuck, how does that apply to sales tax registration? Right, we've got expiring licenses and sales tax certificates, but sales tax registration, once a business registers for sales tax, that never expires, right? Unless the company affirmatively comes in and cancels that registration.
Right. Generally, no. Generally, that obligation is presumed to exist as long as the company doesn't indicate to the contrary. And in fact, even if they change their business model so they don't have an obligation to collect anymore, there are these rules of trailing Nexus, where even if you change your practice, your Nexus profile may still apply for a few months. But Joe, you're absolutely right. Generally, those registrations to collect, and that requirement to collect sales tax, it doesn't expire. It exists for the life of your organization.
Gotcha. So that where this may affect our clients would be in the sales tax certificates or exemption certificates, where those do have an expiration date, and so it sounds like those may be automatically extended. So that may affect our clients and folks on this webinar right now.
Absolutely the case. If either on the if they possess those certificates, or if they take those certificates, the notice of certificate for their customer is about to expire, their customer may legitimately not be able to provide them a new certificate because it's delayed in getting processed by the Revenue Authority.
Yeah, makes sense. Thanks.
So we've also noticed a couple of states announced that they'll allow taxpayers to postpone an audit. So if you're currently under audit and you're not able to coordinate closely with your auditor because everybody is remote and doesn't have access to the necessary records, there may be an ability to defer an audit. Likely, I would suspect you'll have to sign an extension of some type, so statute of limitations don't run out during that time where an audit is postponed. And one thing I thought was really interesting, again, interesting to me, hopefully to you, Indiana announced a rule that said when you donate inventory you've purchased for resale, normally in a lot of states, when you buy something for resale and then later you donate that item to a nonprofit or to some other entity, you have an obligation to self-accrue use tax because you're now not using that item for resale anymore. But what Indiana has said is that indeed, if you're donating inventory and you're donating it as a means to help an organization fight COVID, then that inventory donation won't be subject to a use tax accrual requirement. But
Chuck, is that related only to donations in the sense of charitable contributions?
I believe so. I believe so. It may involve donations to hospitals, which are often or other other entities that are often organized as 501c. Could also likely include governments. But do I have the exact confines of that requirement at my immediate hands? No.
Yeah, and I wanted to back up a little bit and go back to your point about jurisdictions postponing audits. On the income tax side, we're definitely seeing delays in income tax audits, and we are seeing, because of that, like you mentioned, taxpayers signing statute of limitation extensions because of that. Postponing, deferring, we're still seeing activity by the IRS, for example. It's being done remotely, in what we call like a desk audit, where, IRS agents are not coming out on the premise of clients, but it sounds like that's happening in the sales tax world as well.
Oh yeah, so for example, Sovos, we are audited as a certified service provider under the Streamline sales tax agreement, and that audit was scheduled for an in-person visit next month, and I fully suspect that we'll be conducting that audit and continuing down the audit path fully remotely.
Yeah.
So what's interesting, and sort of again interesting to me, what all of this means, in terms of our economy, clearly we're seeing less consumption. That's perhaps no better illustrated than the tremendous drop in the price of oil futures over the last couple of days. And really, that's part of every economy. I don't know. In the last couple of months, I've only purchased a couple of things, although I have purchased a lot of lawn care supplies. but nonetheless, we're seeing less restaurant sales, less gas sales, and a lot of things just aren't being bought right now. And what that's going to mean ultimately is a hit on state revenue coffers, and that hit's going to be, from what I'm seeing, is going to be fairly substantial. And of course, the impact will be felt disproportionately. For example, those states like Florida that rely very heavily on sales tax revenue, and by the way, Florida doesn't tax groceries, and states that either don't have a budget or have a budget dispute or very, very low rainy day funds, they're going to be pretty significantly hit by the budget shortfall. And of course, what's interesting is that the first, and maybe Joe, you have a little more insight on me than this, on this than me, but the first round of funding under the CARES Act the money that's been allocated to states, and a substantial amount of money that's been allocated to states, it can't be spent on items that have already been budgeted for in a state's budget. It's restricted. You can't use that CARES Act money to fill a shortfall that was already accounted for in a state budget. So that leaves, I think, what's going to be a pretty enormous budget gap in a lot of states. And I would suspect, and again, this is a bit speculative on my part, that some of that budget gap is going to be closed through aggressive enforcement. Would you agree with that? Do you see the same thing on the horizon, Joe?
Yeah, I do, Chuck. And you are in your bio, you are very well connected with some of the state sales tax policymakers. And my hunch and my speculation, I agree with you. Are you seeing those policymakers, indicate that there'll be sales tax increases, or it sounds like to you it's going to be more through enforcement, through audits, as opposed to rate increases? And maybe it's just way too early. We're still in the middle of the pandemic to discuss these things. But any sense from the policymakers?
And of course, I was scheduled to go to meet with a lot of them a couple of months ago, and that trip was canceled. And the one to meet with them in Tacoma, Washington, in a couple of months from now has also been canceled. But no, right now I don't see anything on the horizon in terms of rate increases. Could that happen? Yes, but it hasn't materialized yet. And of course, with a lot of legislatures in reduced sessions, to the extent that has to happen through legislation, that could be a while in the making.
Gotcha.
And the other thing to think about a little, and we'll do a little compare contrast with respect to VAT on this topic. I think right now, a lot of states don't even know what their shortfall will be. In a couple of slides, we'll talk about filing and payment deferrals being offered across the country. And really and truly, until states get their sales tax filings from their taxpayers that show how much tax was collected against how much tax was projected by the states don't even right now really know how much their shortfall is. I think once they discover the true delta between projected tax and collected tax, there could be a lot of urgent activities to try to close that tax gap.
Yeah, agree. And on top of that, with reduced sales tax revenue, many states like the federal government are offering economic stimulus packages, similar to the government, bridge loans or whatever the case may be to small businesses. And so, not having that visibility right now on top of the economic stimulus packages, it'll be interesting to see what will happen on the horizon.
Without having that line of sight, it's almost hard to understand how to direct that relief. Having, and we'll talk about this, having real-time insight into where the economy's been hit the most at the ground level would actually enable states to provide more targeted aid to where it's needed most. And we're just not there in the US.
Yep.
Okay, so let's talk a little bit about how taxpayers right now should be thinking about their compliance obligation. If this presentation were happening before June 2018, I'd probably spend an hour on this very, very first point. This question about whether their physical nexus has expanded because now companies have a dispersed workforce, and under the physical nexus rules, having people, including employees, in a jurisdiction creates effectively an automatic obligation to collect sales tax. That rule still exists. No state has done away with their physical nexus standards, but it does just seem to some extent to be eaten up by economic nexus requirements. But it's certainly important to think about. So even if your organization isn't selling into a jurisdiction, if you now isn't selling a lot into a jurisdiction, you may nonetheless have physical nexus there by the presence of employees.
Yeah, And Chuck, I think that that's a really great point, and a common misconception that we see in our sales tax practice is that the Wayfair case that was decided in June of 2018 did not get rid of the physical presence tests that were previously, decided under National Bellis Hess and other rulings. But you still need to look both at physical presence and economic nexus, both factors in determining where a business may need to collect and remit sales tax.
Yeah, I hear the same on this side as well, Joe. People don't understand that physical nexus now sits alongside economic nexus, and one hasn't subsumed the other. All the time I hear that. There was some hope, or there is still some hope of states issuing guidance saying COVID-related business changes as they relate to nexus won't impact your filing requirements. I think that's hopeful. It's aspirational. I don't necessarily see, or haven't yet seen, any states issue guidance of that type saying that don't worry about your remote employees. You won't have any increased compliance because you have a dispersed workforce that's been required based on a state order. I don't know if you've seen anything like that. I haven't.
I haven't, Chuck. No, and is this applicable to businesses that their main business is located in Kansas City, Missouri, but they've got employees that live in Kansas, for example, and
right.
Ordinarily they wouldn't have sales tax nexus in Kansas, but for these stay-at-home orders. Is that generally the fact pattern that we look at?
Yeah, that's exactly right. That's exactly the way I would describe it.
Oh, great.
So of course, one of the things we've seen is that, in fact, a client, when I was talking to a client a few weeks ago, put it to me this way: for a business, if you weren't an e-commerce seller before, you're likely an e-commerce seller now. So certainly businesses were accelerating over the last couple of years their move to deploy an e-commerce component to their business. Even people who were historically earlier in the supply chain, like manufacturers, were opening up e-commerce retail channels. I think this whole situation has accelerated the move to direct e-commerce. And of course, today, since June 2018, where all the states immediately followed along over the course of the following year, every place in the country, except for Missouri and except for Florida, now has an economic nexus requirement that says sellers who sell into a state and exceed a nexus threshold will have an obligation to collect and remit sales tax based exclusively on their economic presence, even if they have no physical presence. And those thresholds are actually really, really low in a lot of jurisdictions. The standard still remains 200 individual sales, not that many. Or I think actually I made 200 purchases from my lawn care supplier this week, but 30 individual bags of mulch, and 200 transactions or $100,000 in annual sales. Not enormous, and that's connected with an or often. So not enormous burdens to hurdle over before you have an obligation to collect and remit in those states. The rules vary from state to state, but really, if you've developed an e-commerce channel, what that could mean, maybe not right away, but next quarter, maybe the next couple of quarters, your company will actually have an obligation to collect and remit tax because you have opened up that economic nexus channel. It's important to understand whether you've exceeded those thresholds, whether you're close to those thresholds, or whether you remain and project to remain below them. And there are plenty of resources. I'm sure Squire has resources. Sovos for sure has resources that show you what those thresholds rules are in every single state. So if you've opened up an e-commerce channel and you haven't move to collect sales tax, there's a good reason to believe that you might soon have an obligation to do so.
Yeah, and Chuck, a really great point, right? It's a state-by-state analysis that we need to look at both the sale threshold and the transaction threshold. And just like you mentioned earlier, many businesses are really flipping the switch on their e-commerce channel. And one thing, and many of those businesses are looking to, the fulfilled by Amazon relationship in doing so, right? That's kind of a natural expansion for many businesses to partner with Amazon. And I think a trap for the unwary is many times in that fulfill by Amazon relationship, it's important to know who owns legal title to the inventory that's stored in those Amazon warehouses. So right. We may not trigger the Wayfair economic nexus thresholds, but we may trigger just physical presence by virtue of the fact that a business owns legal title to inventory stored in an Amazon warehouse by virtue of their fulfill by Amazon relationship. So that's exactly another item that we need to look out for.
That's absolutely 100% correct. So a couple of little tricks here. If indeed your organization needs to register for sales tax, there's a great tool, the Streamline Sales Tax Central Registration Database, that essentially allows you to register for sales tax pretty simply in any one or more of the 24 Streamline Sales Tax member states. It used to be the case where you had to register for all of them if you registered for one of them, but they've eliminated that requirement. So if you have, say, for example, a need to register in 10 SST member states, you can register in those 10, and if 6 months from now, a year from now, you need to register in another 10, you can do that. It's a pretty good simplification for those states that are members of the Streamline Sales Tax Governing Board. And of course, if you do have this expanded economic nexus footprint and you're not currently thinking about tax automation or some other tool that will allow you to meet that requirement, there are a lot of advantages to do that. Of course, this webinar is not in any way a sales pitch, but at least think about whether you might effectively deploy automation as a means of closing that requirement without overly burdening your staff. And that's something that Squire and Sovos specialize in. Okay, so let's go through this kind of quickly. If you're expanding your product set, and we've seen a lot of hero manufacturers move and change their production process to produce new and needed things right now. We had a Sovos client, I won't mention them by name. They're a US located manufacturer of hockey equipment. And they moved to produce face shields, and they asked us for content on how to tax face shields, and darn straight, I gave them as much information as I can humanly could because I was really appreciative of them doing that. But what you don't want to do is, if you're marketing a new product or selling a new product, for goodness sakes, you want to make sure that you're taxing it right. So it's important to understand that there are special rules out there. For example, I know a taxpayer in New Jersey got into a whole world of trouble when they properly taxed toilet paper, because toilet paper and other disposable household paper products are exempt in New Jersey when sold to an individual as opposed to a business. Things like surgical gloves are exempt in a bunch of states. Masks may not be exempt. I don't know about everybody else out there, but I purchased some masks from a clothing retailer, and hopefully if other clothing retailers are doing that, they understand that masks may not be considered clothing, and while they don't necessarily have to tax their clothing in a given state, they might have to tax the mask. Special rules exist out there for hand sanitizers. Safety apparel, it was exempt in Connecticut, but that law changed really recently, and now in Connecticut, when you buy safety apparel for work, things like gloves and aprons and other shop material, safety shoes, those items are no longer exempt from sales tax. Also, when you think about services, so for, you know, in conjunction with the whole world moving to e-commerce, think about things like shipping and handling. Shipping and handling can actually have extremely complicated and nuanced tax ramifications. So for example, if it's a plain shipping charge that doesn't include any markup or any quote unquote handling, but rather closely approximates the cost to ship the item, that might be exempt in a bunch of states. But once you start to add handling, once you start to mark it up, if that shipping charge is actually mandatory as opposed to optional, meaning you have no choice but to use the seller's shipping method, those are all things that can lead to a shipping charge becoming taxable. The other complexity lies in the fact that often a separately itemized shipping charge is actually, if you're selling both taxable and exempt products and services, mostly products though, because services don't have too much of a shipping cost associated with them. Most states say that you can properly apportion that shipping charge across all the items on the invoice based on a valid apportionment method, either, for example, price or weight. And if the underlying item to which the shipping charge is apportioned is not taxable, most states, not all, but most states would say that a portion shipping charge is exempt. And, you know, as a matter of fact, I was talking to a Sovos client about their new offering, which they were charging for curbside delivery. And we were talking about, well, how do the rules for curbside delivery, when you charge for it, is that essentially considered or not considered a shipping charge that happens over a really short distance?
Yeah, and Chuck, you know, these two slides I think highlight to me, you know, that automation point that you brought up earlier. Is just there's so much complexity with all the jurisdictions on the treatment of, you know, shipping and handling and all these necessity items or paper products or masks or whatever the case may be. So it to me just hits home the point that you made earlier about having that automation and getting the taxability correct, especially given the fact that there's going to be shortfalls in states' tax revenue, and a likely response to that is going to be increased audits that could catch, you know, our clients off guard.
Right. You want to do it right because you're providing an essential item to the public, and you don't want to overcharge, but at the same time you don't want to undercharge and expose your company to liability.
Exactly.
And if you're currently using a provider and you're adding a new SKU to your product mix, it could be that that provider can direct you to tax rules that they already support for other clients that cover that item. So it may not be meaningfully additional work to get that item to tax correctly.
Yeah, really good point.
So the other thing, of course, the flip side to exempt products or specialty tax products and services are exempt entities. So if your organization is now expanding sales to hospitals or nursing homes, governments, nonprofits, you know, it's important, becomes now incumbent on you as a seller to make sure that if those entities are exempt, that they give you appropriate exemption documentation, because what that does when you get it is it flips the burden of proof. If you take an exemption certificate and you accept it in good faith, meaning you don't know on its face that it's invalid or incorrect, that will usually shield you as a seller from audit liability. Of course, it won't shield the buyer, but if you don't have that certificate and you don't maintain it, or it's facially bad, then essentially the presumption is against you, because on audit, items are considered taxable unless you as a seller can show that you have a certificate from your customer. So certificate management, as you think about changing the nature of your buyer personas to include more of these exempt entities, really becomes an important thing to think about.
Yeah, and Chuck, you mentioned earlier that many states are allowing their exemption certificates to automatic renewal, right? And so many of our clients will have their exemption certificates on file, and maybe that exemption certificate expires, but that state has granted an automatic extension. So it's definitely worth taking a look at your exemption certificates to make sure that you can feel comfortable under audit.
Exactly. So let's talk a little bit about what your organization can do right now if you're experiencing a compliance challenge, meaning you're not able to produce on a timely basis required tax returns or remit the required funds. And what we've seen here is a lot of state activity to provide taxpayers relief, but understand that the devil is in the details. So really, if we wanted to put things in buckets, we could put them in these three, meaning the state has clearly articulated a COVID-related policy that applies to all taxpayers that allows them some sort of deferral or delay, or it could be a COVID-related policy to which taxpayers are allowed to request relief, meaning it doesn't apply automatically. They have to file a request. That request has to be granted. Of course, hopefully there's somebody in the Revenue Authority working that will able to process that request and grant it. Or some states don't have any express COVID policy, but they have an existing policy that allows taxpayers to seek relief in the situation of a natural disaster or other external force that's preventing them from complying. Now, I think Squire has some of this information, and Sovo certainly does. We have a running list of those jurisdictions that are offering these forms of relief posted to the Sovos website. Squire has some of this too. There are, for those of you who need to find out where you might be able to obtain this kind of relief, that information is widely available. You should be able to get your hands on it. But let's talk about a couple of the watchouts. So first, understand that these rules aren't consistent amongst all tax types. For example, a lot of jurisdictions moved to change their income tax requirements to match the federal income tax filing requirements, but those rules don't apply to sales tax. And that's also true. There are separate rules for property, franchise, gross receipts, meals tax. Make sure that the rule you're looking at applies to the tax type of concern to you.
Yeah, and to that point, Chuck, for example, the federal government allowed the deadline for filing individual and corporate income tax returns, generally due on April 15th for calendar year 2019. Now has been, extended to July 15th, both the filing and the payment dates, and many states adopted that also, but like to Chuck's point, that's for individual income tax or corporate income tax, as the case may be. So it's important to know which type of tax we're talking about.
Exactly. The other thing that we've seen is that sometimes this relief is extended to monthly filers, but not quarterly filers, or the relief is different for monthly and quarterly filers. Also, if you're in a jurisdiction like Colorado or Louisiana or even Alabama that have locally administered local jurisdictions where you file returns directly with the locality, a rule that might apply at the state level, and for any state administered jurisdiction like Colorado counties may not apply in those home rule local jurisdictions, like, for example, Denver. We do see that a lot of the locally administered local jurisdictions are doing their best to follow the state because it's a lot simpler with respect to this relief, but it's not guaranteed. So if you're dealing in any of these places, where you file a local return, don't assume the relief as it relates to the state necessarily applies to the locality. The other thing is that a lot of states are requesting that returns be filed on time, but allowing you to defer your payment or remittance. And that goes back to what we were talking about at the beginning of the presentation, where the return really helps the jurisdiction understand the budget implications, while they will allow companies to defer the payment for at least a little while. And then in a couple of states, we've seen relief, but those relief are only extended to small taxpayers. And of course, in all of these states that have a small taxpayer rule, what is and what is not a small taxpayer, the rules vary substantially. So if you're a smallish taxpayer, don't necessarily think you qualify as a small taxpayer everywhere. You have to look at the rules. In some states, interest continues to accrue even though you have a payment deferral, so you won't get any penalty, but you may get interest. And the reason is that some states are statutorily prohibited from waiving interest. Other states are willing to entertain payment plans, so it's not necessarily the case that once this situation resolves, that every single penny of tax that was previously due becomes due. States are willing to entertain, at least some states, payment plans that allows you to catch up on that tax over a period of time. Some states say that you can't get your vendor discount, the amount of compensation you're allowed to keep for the cost of administration. Some say if you accept one of these programs, you can't take the comp. And of course, some states are playing this month by month. So in March, they announced rules for April filing. In April, they announced rules for May filing, and in May they'll announce rules for June filing. And what's important there is that you keep on track of those things, because if you continue to have a problem, there's no guarantee that those states that are doing it month by month will extend it to the next month. They may declare a different policy for the other month. And on top of all of this, Joe, as you mentioned, we have pretty close contact with a lot of jurisdictions, and a couple have informed me that even though they don't have an official policy, if a taxpayer calls and says they have a real hardship, they will entertain a request on an individual basis based on that particular taxpayer circumstance. I know that's a lot in short order, but again, there's plenty of resources available online that will dig into the details of each jurisdiction's program, and at Sovos especially, we're monitoring those changes really closely on an everyday basis.
Yeah, and Chuck, I was just thinking about it, and during these difficult times, I think it's important, and it may be tempting, I think, for small businesses to use these trust fund taxes for other sources. And I think the caution there is don't allow that temptation to occur. These are still trust fund taxes. These still need to be remitted to the government. We don't see anything in place that is forgiving this or relieving of this. There may be on an individual case-by-case basis payment plans set up, but ultimately these trust fund taxes will need to be remitted.
Normally, not remitting tax that you collect is fraud. So you're right. These are special circumstances, and those circumstances should be deployed judiciously. And you're right. It's a bad look to allocate or use these funds for other reasons, because if it endangers your ability to ultimately remit them, that's going to be an even bigger challenge for your business.
Yep. Yeah. Thanks for that insight.
All right. So I'll turn it over to you, Joe, and let's talk a little bit about VAT.
All right. Well, we just wanted to briefly summarize what we're seeing in the VAT landscape, the VAT landscape. And, before we do, just to talk about some of the basics of VAT. right? In the United States, sales tax is generally imposed on the end consumer. For example, if a manufacturer sells its product to a wholesaler who sells its product to a retailer who sells that product to an end customer, generally U.S. sales tax is imposed on the end customer, and the retailer charges it to that end customer or remits it to the government. That is different. That is imposed at every step in the supply chain. So, for example, manufacturer manufactures a product. It purchases raw materials, and on that purchase of raw materials, VAT is imposed. And then when the manufacturer sells that finished product to the wholesaler, the manufacturer charges VAT to the wholesaler, but then takes a credit for the VAT that was paid on the purchase of those raw materials. And so that's where the value added tax comes in, and is a big distinction between US sales tax. And so that gets us to our first consideration for VAT, is that unlike US sales tax, VAT on the purchases of everything from inventory, fixed assets, supplies, etc., that's imposed on that purchase, and as a result can be a significant cash flow drain, as businesses in foreign jurisdictions are trying to maintain, inventory levels or whatever the case may be. And so, they obviously get to take a credit for the VAT paid when they sell the product, but that we think is going to have an impact on businesses abroad. So that's overall consideration number one. Consideration number two, and Chuck alluded to this, is that many jurisdictions mandate an electronic invoicing system, an e-invoicing system, or a factura system, where the governments have real-time visibility to the amount of indirect tax revenue that is, coming into their coffers as a result of seeing these electronic invoices. And so those jurisdictions, we think, have more visibility into the impact of what the coronavirus is doing and what that's going to do on VAT revenue. And so we think that those jurisdictions will be at the forefront of the determination and potentially in the raising of VAT rates or increasing VAT inspections. So, Chuck, you've got some experience in this, and I'm interested in your thoughts.
Yeah, that's exactly what I'm saying about, though, is that this e-invoicing requirement, and essentially what that boils down to is a real-time or a near real-time scenario where businesses are sending their invoices to the government, and sometimes the government is clearing those invoices before an item is shipped. Other times they're just receiving the information. So this is true all in Latin America. It's true in Hungary. It's true in Spain. It's true in Italy. It's going to be true in Greece in a little while. It's going to be true in India in a while, Vietnam in a while. And these jurisdictions, these still in many cases require a VAT return, but unlike the US, they are not as dependent on the VAT return to understand what their revenue projections look like, because they're getting real-time data on a lot of their economic activity. So you're exactly right. These jurisdictions are able to pinpoint where they might direct relief to disadvantaged businesses, and they're also able to understand what they might need to do in the near and long term to close down that increasing tax gap.
Yeah, and it will surely be interesting to see what they will do to rectify that cash gap.
Yeah.
Why don't we go on to the next slide? And I think in the interest of time, I'm going to go through these fairly quickly. I think we want to leave enough time to answer some questions. But, I've got 3 slides that what we're seeing with respect to VAT changes. And most of these are related to European VAT. But, in summary, Many jurisdictions are allowing a deferral of payment to a later date. They are, they are suspending late payment surcharges, i.e. penalties or interest, as the case may be. So I'm just going to quickly go through these. Austria, for example, they've got a deferment of VAT payment that can be applied for until September 30th. They are also waiving late payment surcharges and interests. Canada is deferring GST/HST payments that were due originally on or after March 27th and before June 30th of 2020. And so no interest is going to apply if payments are made by June 30th of 2020 for Canada. Now, as of last week, France had not made any temporary support measures regarding that. However, I think that may have changed. So we'll check that one and update the slides if possible. But as of last week, France had not done anything. I suspect that may have changed. Germany have certain, what they call federal states that are reducing advance VAT payments. Applications on a federal state basis are being accepted to defer both VAT, but also individual income tax, corporate income tax, and German trade tax. So why don't we go on to the next slide, Chuck? Yep, Ireland's focusing on businesses that have, what they call turnover sales of €3 million or less. That interest rates or interest on late payments are being suspended. They're still saying that VAT returns should be submitted on time. There's a decrease in tax enforcement activity, and like we discussed earlier, tax audits on taxpayers' premises are deferred. In Poland, in summary, they've launched an economic package to counter COVID-19. Most of these are related to economic stimulus packages. They don't have a general deferral period for their VAT. Businesses can request individual relief on an individual basis. They're trying to accelerate all VAT refunds for VAT returns that are filed, and they've got a 0% rating on necessities like medical devices, disinfectants, masks, protective suits. Let's go on to the next slide there. I'll skip Spain in the interest of time, just go directly to the United Kingdom. The UK is allowing a deferral of VAT payments, from March 20th to June 30th. The accumulated VAT liability will need to be paid from the period, from July 1st through March 31st of 2021. And so HMRC, which is the tax authority in the UK, will be contacting those businesses if they've got a deferred VAT liability to come up with an agreed upon payment plan. This is an across the board, no individual applications need to be required. And so we're seeing clients that have UK operations, canceling their direct debits during this time period to avoid, an automatic payment to VAT, which can be deferred, starting to that July 1st period. So let me stop there. I think we just got a couple minutes left, and let's take some questions. I know that Wade has been monitoring the questions during the live event Q&A.
Thanks, Joe. You and Chuck have done such a great job. We don't have any questions, so I think we're good. You covered it so well.
Well, fantastic. Well, I in that case, Wade and Chuck, thanks so much. Chuck, special thanks to you for your expertise and insight. I think that was really, really insightful. Super appreciative of your time. If anyone has any questions that come up, please feel free to reach out to Chuck, myself, or Wade. Happy to discuss these. And so I think with that said, I think we'll turn this back over to you, Sarah.
All right, thanks so much, you guys. That was great. If anybody does end up having questions pop into their head later on, maybe as you're trying to fall asleep, as questions always do, please feel free to just, like they said, reach out to any of the presenters. You're welcome to reach out to me, and I can always forward your question to the right people. We hope you have a great rest of your day, and we hope we see you next week as well for our upcoming webinar.
Thanks so much.
Everyone.
Bye, everybody.
Thanks, everyone.